In this session, let's understand what is NBFC. Already, I've just mentioned that in introductory session. NBFCs are basically companies which are into the business of loans, advances, acquisition of shares, securities and all. They play a major role in financial inclusion. This is something which I've already mentioned. But if the principal business of that institution is, let's say, agricultural activity, industrial activity, or purchase or sale of goods other than securities, or if they are into providing services and they are into sale or purchase or construction of immovable property, then those institutions will not be considered as NBFC. So I said what is NBFC and what is not an NBFC. Even certain other non-banking institutions can be considered as NBFC provided it is notified by Reserve Bank of India, and that should happen with the previous approval of central government in official gazette. Okay. Next point is with regard to certificate of registration. NBFCs should obtain certificate of registration from Reserve Bank of India to commence or carry on their business. This is basically a requirement under section 45IA of Reserve Bank of India Act, and those NBFCs should have a minimum net owned fund of rupees 2 crore. So what is net owned fund? That all you will understand gradually. Okay. And there are certain categories of NBFCs that do not require register or registration under Reserve Bank of India because they are regulated by other regulators. For example, if you take venture capital fund, merchant bank companies, then stock broking companies, they all get registered under SEBI. So for them, regulator is SEBI. So registration under RBI is not required. And insurance companies, they come under the purview of IRDA. So registration under RBI is not required. Nidhi companies, they come under Ministry of Corporate Affairs. Then chit companies, they come under respective state governments. Housing finance companies, they come under National Housing Bank, NHB. Okay. Having gained an idea about NBFC, let us also understand what is the key difference between NBFC and banks. See, NBFCs, they cannot accept demand deposits, but banks can do that. And NBFCs are not part of payment and settlement system, so they cannot issue checks drawn on itself. And the third difference is with regard to insurance, that is, deposit insurance facility is not available in case of deposits with NBFC. That is, we say DICGC cover, Deposit Insurance and Credit Guarantee Corporation cover is not available for the deposits that are made with NBFC. So these three are key differences between NBFC and bank.